Sports Cards. Get at it.
Leotow, Dr. John Peterson here with TE2 Edge Sports Cards, and coming at you live and direct from the Twin Cities, Minnesota, Minneapolis, St. Paul. Hope everybody's doing well out there. It is Friday morning, and I thought I'd do a quick little market update. It's been a minute since I've done one of these, and figured I would do one. I'm a couple days late on this because today is actually the 20th, and this is the market update for the 17th through the 20th, the current week. So you'll have to forgive me for being a little bit late on this, but we're making some progress with inflation, which is really positive for the economy. Last Thursday, the all-important CPI, Consumer Price Index number came out. CPI showed continued movement toward lower inflation, with the headline that month-over-month number has been showing a decrease for the first time in over a year. So that's really good news. Bad news is overall the annual level of inflation is still above what the Fed wants, but bond and mortgage rates are pretty steady, have been steady, and numbers hit dead on with expectations. So overall, we're making progress, which is positive. Now, have we hit the bottom, or have we crossed over from the bottom and now we're starting to head back up? That's really tough to say. And especially in terms of alternative asset classes, it's going to be tough to say. But overall, CPI seems to be down a little bit, and it continues to be down, and it's a bit of a pattern. So that's good. It means that the interest rate hikes that the Fed has been engaged in over the last 6, 7, 8 months are starting to take some effect, and we could see an acceleration of the decrease of the CPI next month and the following month. So we'll just have to see what happens with that. Now, PPI came out this week, Producer Price Index, and that is a measure of the cost paid by businesses to produce goods before they go to the consumer, before they're sold. Usually the PPI is, if I'm not mistaken, is calculated at wholesale prices, and the PPI was down 0.5%. Which actually exceeded what people were anticipating. So that's a positive thing too, because if the cost that businesses have to pay to produce items decreases, then that means that they can hopefully lower the prices and the cost for what they're selling it to you for. So I don't think we're going to see a 50% decrease in the cost of eggs anytime soon, or soda pop, or milk, or gas, or anything like that. Actually, gas has gone back up a little bit, but overall, the prices that we're paying for things should continue to go down. So how does this impact the card market? I don't know. I've seen some different things on YouTube. Sports card investor, younger guy, seems to think that we're close to the bottom, or have not, if not at the bottom, and that things are going to go up. Jeff Wilson has talked about things bouncing back up. I think it's possible that we've gotten to the bottom, but it's also possible that things could worsen if inflation drops too quickly and we head into a recession, or a hard recession, as they're calling it. Hard recession versus a soft recession, which I don't know the exact ins and outs of the difference between those two, but overall, I think things seem to be looking better. So stay tuned. Keep an eye on stuff. I wouldn't go out and start just automatically putting your cards up for auction. You're probably not going to realize the gains that you're hoping for if you were to do that. I think most people that I hear talk about selling cards are doing so by doing buy it nows, listing cards, either through ComC or eBay or MySlabs or whatever it might be. So diversify your selling platforms is what I would say, and look for opportunities to wisely invest. So anyway, hope you're all doing well out there. Take care. Peace out, and one love.